You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome back to this rockingest of options shows, the option block. A little bit of options wit, a little bit of options wisdom, a little bit of fun, a little bit of hilarity, a little bit of your questions. Mix it all together, and you got the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're saying to yourself, what the heck is that? Well, first off, welcome. Secondly, you're probably hearing this show somehow magically, probably through our network feed, in which case you already got it. If you just found this by itself, maybe in one of the standalone services like a Stitcher or an iTunes, something like that, then by all means, you probably want to check out our main network feed. That's where everything is kind of housed. If you want to get it all in one easy place, delivered straight to your ear holes, that indeed is the best way to do that. Again, search for Options Insider Radio Network wherever you find our stuff, iTunes, TuneIn, Stitcher, or via the app stores. Our App Store app is there as well. It's just called, plainly enough, the Options Insider Radio Network app. So you can't really confuse it with anything else. And that'll get you pretty much access to everything we've ever done. Coming up in January, in about a month, it'll be 10 years of this stuff we've been pushing out for you guys. All completely free, all hopefully fun and enjoyable and informative and educational, and all sorts of fun stuff. We'll keep your commute full, don't worry. So if you're saying to yourself, I got a long commute to New York or Chicago or wherever the heck it is you commute to, we'll get you covered. And of course, however you listen, including those of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. We love all of you folks out there too. But however you choose to listen or get access to our stuff, make sure you hit us up with your questions, your comments, your insights. We love to hear from you guys. And joining me on the old program today, let's start in order of proximity, because I don't know what the heck's going on out there in Maine. We'll find out. Let's go first to that placid, tranquil realm known as St. Charles, Illinois, where we are joined by none other than Uncle Mike Tussaw. Uncle Mike, how fares thee out there in St. Charles? And have you guys gotten snowed under like everybody else?
Oh, of course. It's the placid, tranquil rain, but just the beauty here in terms of looking at the snow on the trees and seeing the river that's just starting to freeze. It's a beautiful thing. It is quite the what did you say? The placid. I forget how you even described it. It was that good.
I think placid, tranquil hamlet. I've even moved on myself. I've been working on other things behind the scenes here. So yes, I don't even know what I said. It was that good. We'll just say it was a pearl of wisdom.
And it is that good.
There you go. I did say placid, tranquil hamlet. I'm glad someone was listening as we move on. I think he's done fixing his new snowblower, whatever the heck it is you do on snowy days out there in the Duchy of Maine. Maybe he was making ice castles, ice forts with the kids. I, for some reason, have this image in my head of the movie Elf, where Buddy the Elf is just getting in a snowball fight, and he's just machine gunning everybody with snowballs. That's what I think the Rock Lobster was up to today. Mr. Andrew Giovinazzi from OptionPit.com, complete, of course, with the elf costume as well. Is that what you were doing today, Mr. Rock Lobster?
I wish. I actually got the new snowblower running. It was very exciting. The kids just left to their cousin's house. It is a little like a Rockwell painting. However, my ice rink is covered with snow, and I have to get it off. So we are. It's mostly just it's a snow preparation day. Although the children, of course, have fun because that's what they do.
Snow on the ice rink. That might be the definition, sir, of first world problems. We'll discuss that and more as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was catching our activity, or I should say what activity was catching our attention out there in today's activity, as I just share a nice, fun, disparaging live tweet about the rock lobster, as I am wont to do. But of course, today is, of course, Monday, December 12th, for all of you playing along after the fact, and a bit of a mixed day on the old street, with the S&P closing slightly off, the Dow closing slightly up, and the tech-heavy NASDAQ closing a little bit more off than the others, but not a heck of a lot, about 0.4 of a percentage point or so for all of you keeping score at home. And of course, that little bit of mixed greens and reds on the old field meant a little bit of a green day in the realm of ye old VIX cash, with back again north of the 12 handle to the tune of nearly 1260 out here, closing the day out there north of the 12.5 realm in VIX cash land. So a lot of fun stuff to parse, and we'll get into all of that shortly. But before we even do that, let me check in with my cohorts here, my partners in crime. Let's see what caught their eye in today's activity. Of course, we have big, broad indices, even in this anemic upside move, still flirting with new highs out there in indices like the Dow, everyone's favorite kind of generic broad index. I know most of our listeners are S&P folks, but the Dow gets some love every now and then, too. Also seeing a little bit of a jump out there in crude. So a lot of things to talk about. Let's start with Uncle Mike. What caught your eye in today's activity, sir?
Well, like you said, it is a little bit of a green day. So when I come around, I think I like to look at. Nobody caught that. I'm so disappointed in you guys.
We're not on our A game today, sir.
You are not. I was when you said a bit of a green day, I was waiting the whole time to do that one. But anyway, with that being said, I think the main thing that I saw that really stuck out to me was the gap up in XLE as well as crude, and then just the ultimate sliding effect with which it had throughout the day today. If you look at XLE, pre-market, XLE got as high as 78.58, and that was the high of the day about an hour before the open, and it closed almost $2 below that. It went pretty much straight down. Now, what I've been saying for a while is that I'm still bullish over the course of the next couple of years on XLE, but I do see a little bit of a pullback coming down to possibly the low 70s, and this may have been a little bit of a peak today for XLE. I'm not calling it, but this may be the start of the pullback with which I've been waiting for to tell people now's another chance to get into it. For those of you who did not get into it when I originally said to get into it back in the earlier part of the year. So I thought that was probably the main thing that I saw that really stuck out to me. A couple other things that we have going on in the marketplace. Of course, the Fed is coming up, which we can talk about a little bit on Around the Block, of course. But the other thing in terms of the sectors with which we had, it was just a bit of a green day, but it was a red day in the S&P. We do have XLF. We have the financials down roughly 1% on the day. So we did get a little bit of a pullback, but good gosh, it's been just flying up like gangbusters lately. We do have to, pullbacks do happen at some point. There is a such thing as a down day in things that exist. Gold, for the most part, was flat, as well as silver was up a little bit on the day, up roughly 1%. The other thing, just to kind of add to the energy theme with which we have, was nat gas, and I just did not type in the correct ticker symbol for nat gas. Nat gas did not have another new year-to-date high today. Nat gas did gap down. We closed last week in the 370s, gapped down and stayed roughly flat on the day for nat gas. So a lot going on, and what I'm curious to see is that we have a lot of cold weather coming. If we do have another polar vortex-esque winter coming up, can this possibly affect the price of natural gas coming up with the increased demand on it? At least in the Chicago area over the course of the next couple of weeks, I don't think we're going to be above freezing for at least another 2 weeks. So it'll be interesting to see what happens with that. But other than what I'd mentioned, I think the Fed is the big news of the market, along with the Dow flirting with 20,000, and us just keep continuing to inch our way higher. But with a split ticket today, of course, the S&P being down a little bit.
Uncle Mike, this must be sad times for you, because even though you're long the XLE, and you love to see it rally, the farther away you go from that magical 30 handle, how are you going to keep writing these 30 puts anymore? It's becoming less and less attractive for you to keep blasting away at that strike, and that must bring a single tear to your eye, sir.
I think I'll just write them for a zero credit just for the sake of writing them. What the heck?
I think that works. I think most brokers will accept that. A zero reward risk trade that always works well in their risk ledgers. No one's going to call you at all or tap you on the shoulder about that one. Speaking of risk reward, the rock lobster, he's been known to be a bit of a curmudgeon when it comes to risk versus reward. He always wants at least a penny for his risk. He won't do it for even. He won't do it for nothing. So he's a bit of a curmudgeon. So let's see what caught his curmudgeonly eye today when he wasn't busy snow blowing his ice rink and fixing his manicured nails and all the other fun things he does in the Duchy of Maine all day long.
I like the fixing the manicured nails and trying to clear the ice rink off in the same. You stuff that into the same thought. That's very impressive.
I'm trying to show the different strata you live upon, sir, than the rest of us.
The range, the broad range in the woods of Maine. I have to say a couple things. Like Mike said, the rally and then the pullback, and because I watch XOP, that's another one that's a little more speculative, I think. A lot of those drillers and exploring companies have a lot of short interest in them, and I think they are more prone to pop. So we have one in the odd block today. So that part caught my eye. Financials finally pulling. I mean, they had to. They've been up 25% or something. So at some point they had to stop. Then of course there will be on CNBC saying, "I told you they were overbought," and they pull back at 1%. VIX making a move up, I think more weekend effect. But when was the last time we had a Fed announcement and the VIX rose to 1259? I can't think of one. It's been probably since 2007, maybe, and I don't even think that's an exaggeration that we have had a VIX in the 12 handle before a Fed meeting. So it might be a return to some sort of normalcy, which I will applaud, getting the Fed out of the bond buying business, although Mario Draghi is still, I think, a little in love with it. He extended it, but took the dollar amount down last week. I don't quite know what that's going to do, but it sent the euro dropping a little bit before it recovered today. Again, probably a little dollar, a little dollar pullback, but just overall, you've got a lower VIX. You have sectors of the market running. The positions I like a long gamma positions, trying to get my juice for free. Of course, that will be the title of my book, just because how many other option books are written that said try to get your juice for free?
A lot of confused mothers buying that book, thinking it's the secret for free, a lifetime of free orange juice and cranberry juice and juice boxes, and just a lot of angry returns, I think, to the publisher on that one.
I think so. The juicerator, they thought they're going to get the secret to their juicerator, and they're sadly mistaken. But technology flat after bouncing a little bit. One thing you'll see is technology is kind of close to its year highs or all-time highs, or at it. The SP 500 obviously is clearly through it with the help of commodities starting to lift a little bit, and obviously the financials that have ripped. So if you look at it, there's still sectors of the S&P 500 that can make it go higher if certain parts decide to join. So, of course, that will make Mr. Tusaw's bullish case. As expensive as a lot of the Q stocks are, they're definitely, they are valued, but they're not in crazy mode yet. Obviously, there's still some individual stocks that are, but Apple, which is a big chunk of the market cap, is still reasonable valuation. Google, not cheap, but not crazy considering how it grows. Facebook's expensive. But, a lot of other big market caps, Cisco, Intel, all that kind of stuff, it's just not that expensive. I still think there's plenty to go in that area. I think the financials have to get to the show me point now that they're up. I mean, probably about 40% since midsummer, when they were probably trading at, I would call, the cheap multiple. Now that they're no longer cheap, they probably have to start bringing some earnings. So I'm looking for the cheap stuff. And if oil remains here, all of a sudden I think some stocks will look pretty reasonable, because $50 is the kind of the happy spot. And it's one of those things where we'll see if all this OPEC stuff holds up. It was kind of a little bit of a surprise today. So it's one of those, it's a show me day. Okay, we had the rally, but let's show me higher numbers. So that's where I am with that. And, there's an individual move, pit chat move, like CMG is trading like a biotech, even though they make a bunch of, let's just call them not properly spiced burritos, because they have stuff in them that nobody wants. But that as a name that I look at was moving the most, and there's a little bit of a help from the biotech kind of, it tries to get off its back and then it gets slapped back down again there. So not quite sure what's going on. But as we try to make heads or tails of the next administration, the market is still in that kind of picking the winner type mode. So we'll see how that continues on.
I like that. CMG as a biotech, formerly the stealth Apple. Not too stealthy anymore once you have a bunch of salmonella outbreaks or whatever, E. coli, whatever the heck it was. I like that. Not properly spiced burritos. I think that's a good euphemistic way. You should be their crisis PR manager, sir. I think you have a knack for that sort of thing. You mentioned the administration, so let's touch on it really quickly. If all these rallying markets weren't enough to convince you that the market looks favorably upon the new administration, at least from a broad fiscal and regulatory perspective, a few other data points coming in to slam that point home. First off, UBS, they polled 1,200 of what they're terming their affluent and high net worth clients. They polled them in mid-October, so before the election, and then immediately after the election, they found that, surprise, surprise, a lot of these people were happy in terms of optimistic for the market, I should say, not happy. But we're maybe assuming some emotional impact where there wasn't. But they said, they said a vast majority, a large increase actually, 48%, nearly half of the investors. And this is right after the election, so it's pretty close. They hadn't seen the run up in the market yet. So obviously in hindsight now, everyone's going to say that. But right around that time, nearly half, 48%, people said they had a positive economic outlook. That was for 12 months. That was compared to only 39% in the weeks leading up to the election. Not surprisingly, a large percentage of them also voted for Trump, which is interesting. But also 55% of them reported making significant portfolio changes ahead of the election to protect their money, including roughly a third increasing cash and a quarter shifting to a more conservative asset allocation. Unfortunately, no data on how many of them actually bought a put. That would be kind of interesting. Aside from Mark Cuban, who trumpeted it loudly into the rafters, I don't know of anyone else who came out there and actually advertised that. And if that's not enough data for you, we also saw coming out, who is this? This is Lipper. Lipper saying that week after the election, U.S.-based ETFs had their largest inflow on record, $27 billion. That data, Lipper's data, goes back to 1996, and if you track ETFs, that was pretty much early days for ETFs. So it goes back for pretty much the entirety of the ETF run, and 27 billion weekly inflows in 1 week. That's the largest they've ever seen. So if all of this pop in the market wasn't enough to convince you that, hey, at least fiscally and economically, people are looking forward to the new administration, then there you go, a few other data points. So all of our hardcore Hillary lovers in the audience, Mike and Andrew, could just have another reason to be angry because there's some data to throw in their face. All right, let's keep going. Just kidding. We have no political view here. Just like to point out data you guys can use in your own barroom brawls and or arguments as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where Andrew and I, and sometimes Uncle Mike, if he's feeling frisky, don our fedoras and perhaps a good sidearm, because you never know. It's kind of we're going over to the rough side of the track, so you might need some protection and a nice trench coat. And we attempt to divine what's going on the shadier side of the options tracks. Let's kick things off with an old pal of ours. I haven't checked in with this guy in a little bit. It's been at least a month or two. But I'm always a fan of these ones where the ticker symbol is informative, is either close to the name or somehow informative on what the company does. So we're kicking it off with Transocean Limited, ticker symbol RIG, R-I-G. I like the broad simplicity of a nice ticker like that. No question, really, about what it is these guys do. Let's see. Of course, ticker symbol RIG, closing today $15.54, up about a dime, a little bit more than that on the day. So it wasn't underlying that really caught our eye. This one's done all right of late, done about 33, nearly 34,000 contracts a day. So pretty decent paper, all things considered, out here in RIG, doing a bit more than that today, to the tune of nearly 70,000 contracts, so over 2x their ADV. About 1.5 to 1 puts over calls, so a slight bias to the puts, and that is indeed where our attention was drawn in today's flurry of paper out here in RIG, and it wasn't in the weeklies, DEES, or even the straight-up monthly DEES, or even regular Jan. No. We had to go a little bit farther out to find our celebrity/victim today. It was all the way out to Jan of 2018. It's been a while since we've detailed paper this long term here on the old Odd Block, but that's kind of what makes it odd. Hence the inclusion in the segment today. And what we saw was a pretty sized block of 10,000 of the RIG Jan 2018 10 puts going up for $1.16, going up in one block over there on the ARCA. They were marked spread, but there was no spread leg with it. So the only spread leg really being the delta neutral underlying component, about 160,000 shares, also went up at a price of $15.45. So it looks like it's a straight up delta neutral put buy. So buying puts, buying stock. We kind of assume that for a couple of reasons where it went up on the bid-ask spread. Also the fact that there is some size open interest on this strike, and so our friend here could be looking to get into the options, not on the strike, short size open interest just in general, short open interest on the name, and size open interest on this particular strike. In fact, a lot of the strikes out in Jan 2018 on the put side have some pretty size open interest, again, perhaps indicating that people are leaning a wee bit short out there. About nearly 70,000 contracts open on the 8 strike. It's a bit of a funky strike selection. You don't have every strike all the way down from 15. You have 13, 10, and 8, and 5. So not a lot of strike selection. Perhaps that's also one of the reasons why so much open interest aggregated on this. But either way, if you're buying puts, buying stock, you want this thing to move aggressively and not really kind of sit here in one place. So our friend here putting up some size puts. Again, there is size open interest on here as well. So there is a potential that this could be closing, even though we've scratched our heads at weirder things like closing a 2018 put position before it's even 2017. But we've seen weirder things, Mr. Rock Lobster. So how do you fall on this one? Do you think it's just opening up, buying some more puts and stock? You think perhaps our friend is closing? What do you think is going up here?
Actually, this is one I have a main line to the pit where it trades. So it was a put and stock purchase, delta neutral. RIG has a substantial amount of the underlying open interest is short. I hear it's in like last time I looked, on the neighborhood of like 25%, something like that. So this is like the street hates this name for some reason. Because oil drilling, nobody's going to do it. Nobody's going to do deep water drilling, backlog, all that stuff. Either way, it has, and it's. I got a full disclosure. I've had a position in it from since $12.
Oh, so that open interest is you. The 65,000. That's you on the Jan 2018 8 strike. That's you.
Yeah. I wish it was that many. It's not, but it's growing because I keep rolling it and doubling it as it rolls up. it looks like somebody just is looking for a parabolic move. So they own some 10 puts, a lot of them. I mean, the delta is only 16. So, they're looking for, you have a delta like that with those kind of puts, you're looking for quite a move up. So it's it is what I would say is a squeeze type of play where somebody's buying the puts in stock, the control position, and then and we'll let time play out. We'll, whether rig is worth $25 or $2. It's one of the two. I'm a little ambivalent at this point between, but it looks like it's fixing for another move. It's already up around 25% in 2 weeks, and the squeezometry is not gone. It feels like. That's all I'll say.
There's some good squeezometry to be had here in good old rig. I thought that position was kind of small for you. 60,000+. That's pocket change for you guys over there who run your own ice rinks. We all know how lucrative that business could be. As we move on into our next name, I'm not really familiar with this ticker, so maybe Andrew or even Mike, you can help me with this. SPI, am I pronouncing that correctly?
The SPI, yes. It's a small. I think it's closer to something like SPY or something like that.
I think it stands for Scandinavian Processing of Youths, so it's like a youth correctional facility somewhere in the Norwegian region. Interesting. Leave it to you to pick the lesser known tickers to discuss. No, of course we're getting into SPY. We don't talk SPY a lot here because it's the odd block. This is usually where we talk funky biotechs or stealth biotechs like CMG or weirdos like Rig and all sorts of other fun stuff going up. So SPY doesn't usually fall into that category. Except around divvy time when all sorts of funky stuff tends to happen. And that's kind of what we're seeing out here again today. Of course, SPY, in case you're somehow not familiar, the big old S&P 500 ETF, ticker symbol, of course, SPY, closing today, 226.25, off fractionally on the day, like we mentioned at the top of the show. Not much of merit to discuss net underlying movement. In case you're wondering, this thing does put up some paper to the tune of an ADV of 2.7 million contracts a day. Now, not all contracts are created equal, and SPY certainly are a little bit smaller than others, but still, net volume-wise, it's kind of hard to ignore that amount of paper in any given product. That's just a ton of paper. Today, actually doing a fair bit less, only doing a little bit over 2 million contracts, pretty much roughly broken down 1-to-1 calls over puts. So that wasn't what caught our eye, and partially one of the reasons, perhaps, that it was so evenly distributed calls over puts was because of our next trade. There probably should be some. We probably should have some splaining to do, as they used to say on the old I Love Lucy show. That's a dated reference, but probably should explain what the heck is up here, because some of our listeners out there may be scratching their heads saying, just what the heck is a box? So maybe we will start there before we even parse what is going up out here. I used to see a lot of boxes going up in the SPX. That's traditionally where they go because it's usually an institutional trade. It's a way for, you got essentially, easily for me to say today, essentially to finance or lend money, large amounts of cash, over different amounts of time in the box. Kind of just an interest rate play, effectively. You don't see traditionally as many of them going up in SPY for a lot of the reasons. Big institutional paper goes up in SPX. It's not as favorable to do it in SPY, except around this kind of time when we have a nice, shall we say, a reason to do it, which is perhaps a bit of a funky, juicy div to attract here. So maybe let's start there. I kind of gave a 10,000-foot perspective. If you want to give a bit of an overview of boxes, Mr. Rock Lobster, we can do that. And then we'll get into exactly why this one is so funky.
So funky. Well, one thing is, so this is for all you all you listeners that love minutia. It's not super minutia though. It's actually, it was a test. One of my former clients, who's now a market maker, he's like, okay, this box went up. Why did they do it? Right. So sometimes we have you get a little game, like see if you could figure it out. It was a 10-point box. So normally you buy a box. The thing when you buy a box is the value is known ahead of time, meaning if you pay $10.09 for a $10 box, you know you're going to lose 9 cents. There's cost of carry too, so you're going to lose 9 cents pretty much, unless something weird happens with cost of carry, which is generally dividends or interest rates. So box going up at $10, a lock trade. So you're long the guts of the box, so those are the in-the-money calls. In this case, would be the D's 30, the D's 230s, and the D's 240. D's 230 calls, D's 240 puts. You're long the guts. Now, the only way that the value of those strikes are really going to change dramatically is if those D's 230 calls are an exercise for the SPY divvy, which is substantial. It's like $1.30. So if you buy that box, you have to be wildly bullish after the Fed, because you're giving away 9 cents and it traded 16,000 times. So it's not a small amount of money. Now, interesting that is on there. It could be there's a huge open interest on that strike, massive. But it has an implied call, in that it is possible that those calls are an exercise. And then again, you're long the put, which would be, don't forget that put will be exercised the day of. So you would skip the divvy with the put, but you would collect the divvy with the call, and that was how you would net clean. You would clean up on the box, because you would get actually more than you started with. So anyway, that would be the central trade, because the guy exercised the 230 call. He'll get the divvy, which is an extra $1.30 he didn't expect, and then the deep put skips the divvy because it will go to a credit into the cycle, and you're not going to be assigned on that. You exercise the put on XD day, and you don't have to take the loss on, or you don't have to pay the divvy after that. So it's a calendar trade. There's some complexity into it. Hopefully I explained it okay, but ultimately it's somebody is trying to take a wild shot on the 230 strike is my guess. I'm just looking here at the D's 230 calls. It's a little odd on that one, I have to say. Because what are they? He was paying for those. The D's 230s are pricing. They're pricing 11 cents, and the box is 9. So they're trying to make something happen, I guess, and we'll see if it works. But normally when you see those trades, because you're seeing a lot of those 240s go up, you're like, why is anybody trading the 240s? That's because they were a spread with the 230s, and thus creating a box-like structure. So it looks like there's a little bit more of that paper going up as well. So, don't forget, a lot of these calls could become an exercise, as we move up, and the big moves up sort of change things for the call holders or people that are short the calls. All of a sudden, if they get assigned away in stock because the divvy gets messy. So there's potential there. It's one to watch. We'll check on it Thursday, because after the Fed does its thing, if we're trading 232, you probably are going to see a little bit of action on that strike for sure. So something to watch. And again, this is a little run into the minutia of exercise and assignment, but it still exists.
This is what scares people about options sometimes. Sometimes the arcane minutia. I know whenever I see funky spreads going up in SPY, I don't have to check my calendar. I know 9 times out of 10, it's divvy time in SPY. People always forget every quarter that SPY has a dividend, and it does, and it's regular, it's quarterly. And so we get this kind of funky paper. And two, I think this maybe is a bit of a sign, too, of some of the lengths you have to go these days. I kind of agree with you. I think there is a bit of a divvy capture feel to this. Kind of some of the lengths you have to go these days to get some of these div plays off. It's not as straightforward as it used to be to effectively do those wash trades and try to get a free dividend on it. The OCC has cracked down on a lot of that stuff now. So you have to do the verticals, and in this case, boxes as a way to try to disguise some of your intent. So, maybe perhaps a reflection of all of the above, funky dividends, as well as the crazy lengths you have to go to in this day and age to try to do a good old div capture trade. Because who are you really hurting? aside from maybe the retail investing public and a number of other people out there, some big funds who maybe don't really know options that well, and a number of other people you may be hurting with your actions, but still. Let's let them go up. We've talked about div trades in the past. We'll just keep on rolling instead to our final name/victim here in the odd block. This is, I believe, a newcomer to the odd block. This is Hain Celestial Group, Inc., ticker symbol Hain, Hain. Do they study the stars? No, they don't. They instead manufacture, market, distribute, and sell organic and natural products. So there you go. Nothing to do with the stars. So they get a demerit in the naming category. They closed today $39.12, off about 1% on the day. It's a name that does about 4,200 contracts a day, so not bad paper, especially given all things odd block out here. And today doing about 12, nearly 13,000 contracts. So lighten it up today. That's what caught our eye. And it seemed like I saw a bit of a old diagonal here. It was the Dees 40. Jan 43, lighting it up. When we first saw it, 2,650 times. Looks like paper selling the Dees 40s for 34 cents, buying the Jan 43s. Doing the whole thing net for 34 cents. As the day went on, looks like about 2x. That went up about 5,000 total contracts on both strikes here. Yeah, about 5,000 on the Jan and about 4,400 on the Dees. Going up in 2 blocks over there on the ARCA. Open interest about 4,400 on the Dees 40. Surprise, surprise. So looks like probably closing there. Only 1,800 open on the Jan. Yeah, so 1,800. So probably opening there. Looks like your standard old closing out the Dees, selling those, buying some Jan. Probably did all right. This thing has moved a little bit higher. Then it kind of hovered there. It never really got to that strike he wanted. It never broke through the 40 strike, which would have obviously been ideal for him. So perhaps deciding to reestablish out here in Jan, and of course going the old up and out, going up to 43, because the 40s are a wee bit pricier in Jan. So deciding discretion, the better part of the valor. Close on the 40s, open up again in Jan on the 43s. Mr. Rock Lobster, take us home. Anything catching your eye on this trade in Hain?
Doesn't it just look like kind of your vanilla roll up? They're looking for a little action. They didn't quite get enough action, and they're looking for more time. One of my favorite sayings, I don't know if I invented this, but I might have. Options love a bull market because you can actually buy calls. The volatility is really low, gives you lots of gamma, and the runaway bull markets, it's not like I'm making an excuse for them, but I mean, sometimes you just buy calls. That's what you do. So what you really need, especially when the vol is low, buy more time. Buy all the time you can buy for those low dollars, and things can happen. I think that's what this customer is trying to do here. They want to buy time. They want to buy some up. They want Hain to recover some. It's one of those stocks that have not done well when much has done very well this year, and they're looking to get on some Hain, but they want some time for it to happen.
Yeah, you're right. It does have a bit of a plain vanilla veneer to it, flavor to it, if you will. It's interesting. Not as funky as the SPY dividend, but they can't all be crazy funk. Sometimes it's just straight up rolls, listeners. And it's Monday. It means it's time for you guys to take the reins with some of your listener mail.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is the portion of the show where you guys, no matter how you're listening after the fact, hit us up via email or via social media or via the website. If you're listening live, hit us up in the chat room. You hit us up with all kinds of questions. We ask you guys questions a lot as well, including our question of the week. This week's one is showing surprising legs. We posted it not that long ago, and sometimes there are questions, like usually if you post something VIX or maybe Apple or a few others, people take to them right away and they respond aggressively very quickly. Some others are a little bit more complicated. People take time to think about them. They have to respond later in the week. It's a question for the whole week, so it stays up all week. I thought this one would maybe fall in the latter category, but we posted it not that long ago, and it's already blown the doors off of the VIX ones and the Apple ones and everything else that we ask in terms of immediate response. So people clearly have advisors and options on the brain. Our question this week was, financial advisors represent the last options frontier. What level of options knowledge do you expect from your advisor? And we broke it down kind of the way brokers do when you apply for an options account, level 1, level 2, level 3. So we gave you 4 choices. We said none, I'll do it myself. Level 1, so your basic buy-in puts and calls type advisor. Level 2, guy's a little bit more sophisticated. He understands maybe writing options for income, maybe understands things like volatility, how they impact options, things like that. And then level 3, you want a hardcore options specialist. You want an Uncle Mike. You want something along those lines. Kind of an interesting poll. People are responding en masse. So speaking of Uncle Mike, we'll start with you. Uncle Mike, what is your vote and what do you think is winning?
Well, if my vote's not number 3, then I'm really on the wrong business.
You're
on
in
the wrong show.
I gave you an opportunity.
So I'm going to go, out of principle, my vote's going to be number 5. Just because of that scale of 1 to 3, I think it needs to be a 5. And if the audience didn't pick number 3, then I am not even be able to begin to say how insanely disappointed I am in you. If that's what you're looking for, an advisor. Or if you're going to say I'll do it myself, I respect that too.
Yeah, see, I was kind of torn because I wasn't sure whether they would pick number 3 because they want a hardcore guy, or maybe we have a lot of hardcores in our audience. They might just say, I'll do it myself. So I was kind of torn myself as to which one would be winning. Mr. Rock Lobster, what's your call here, and what do you think is winning?
I think my call is people would like a, it's a question of what they want and what they get. My guess is they're going to get level 1. They would like Tucson, like level 4 or 5 or, or whatever. But I'm going to guess that they're going to be satisfied with, I'm just going to go with what they should have. They should have level 3. That's what I'm thinking. They should have level, they should have somebody that knows what they're doing with options, because, just if you don't, you just waste a whole lot of money. There you go.
And that's your answer for all of it. You pick 3, and you think 3 is winning?
That should be, yes.
Okay, it should be. Yes, I like it. So yeah, Uncle Mike, I was kind of torn. Like I was saying earlier, I wasn't sure if everyone would kind of flock into level 3 and get like an Uncle Mike kind of advisor, or if they'd say, yeah, I'm sick of advisors, or they don't understand what I'm doing, I'm going to do it myself. And that seems to be what's winning so far, with 44% saying none, I will do it myself. So you have some ground to make up with those folks, Uncle Mike. Number 2, a close number 2 is, it's kind of a close tie for number 2, really, with level 3 being 20%, level 1, just buying puts and calls, 19%, and level 2, income and vol last, a close last with 17%. So everyone else is kind of split along those other levels, which I think that's really interesting to me, because we don't really speak to a general audience, shall we say. A lot of our listeners and our people on social media are kind of down the rabbit hole of options. So I would maybe assume a little bit different response, but that's what makes it interesting. That's why we do these things. I even asked this to our financial advisors today on our Advisors Options show, and they were I was surprisingly, they were kind of generous with their responses. They all kind of came in around level 2. They said, maybe it's a lot to expect level 3 from most financial advisors. So we'll be generous and say you come in, you expect a guy who understands options, can buy a put for you, can sell a call for you, understands some of volatility. So they were even surprisingly generous. So yeah, the sentiment is all over the board on this one, which is kind of fascinating. And again, it's only been up for a couple hours. I can't wait to see what happens when this one's been up for a while. Uncle Mike, I can see your ears just burning and your hackles on the back of your neck standing up. So what say you to this result so far, sir?
Okay, a couple of things I want to say on this in terms of it. If you want to do the option trading yourself, I have full respect for that. This business was built on self-directed option traders. I totally respect you in doing that. If you want someone like myself to do it, then I totally respect that as well. who I want to speak to right now are the tweeners. If I'm going to vote for a presidential candidate, I want him to know what Aleppo is. And it's what was it? I believe it was Gary Johnson. He didn't have any clue what the heck it was or something like that.
Yes.
Now, granted, if you want this person to lead the free world, he should at least know what that is. Now, on the flip side, let's say that you're at the stage of life to where you're getting you have millions and millions of dollars, you're retired, and all you need is some muni bond income to support you. And that's why you're working with a financial advisor so he can find you an extra 10 bips on your muni bonds because he's just that on top of it. And if that's the case, and maybe you have a little bit of fun money, you want to deal with options yourself, that's fine. That advisor doesn't need to know anything about options because that's not his practice, that's not his specialty. Where my concern comes in is that let's say that you have an advisor that is working covered calls with you. And he's just doing it because of the fact that he wants to sound cool because he's an option guy. Oh, yeah, I do options too. I do covered calls. Covered calls are great. Covered calls. Here, have a covered call with that. I do covered calls. And then the second you say to him, oh, well, you just got called out of that stock. Why don't you sell a put to get back into it? Oh, no, selling puts is way too risky. If the option advisor doesn't have that type of basic knowledge, run away. That is like going to a doctor and explaining anatomy to a doctor. Why are you paying the doctor if you have to explain the anatomy to him? Now, I understand a doctor's not going to know everything. He's a human being. He's perfect. And the reality of it is that a financial advisor, even myself, I actually call upon the greasy meatball and the rock lobster for advice upon VIX issues at times. And you're not going to know everything. But if you're going to trust someone to do option-based things, they need to be a level 3 in terms of this regard, in my opinion. And if they're not, then I think you're really setting yourself up for a major problem going down the road. Once again, everyone's going to have specialties, just like a general physician might refer to a specialist about some type of brain trauma or send them to a specialist. In fact, I had a client once that really wanted to learn a little bit about trading short term on the VIX. I've sent him to I paid Andrew myself to educate her on it because he knows more about that than I do. But if you want someone that is actually in the mix, you need to have that's doing options. He needs to know options. My rant is done for the day, sir.
Yeah, we had no idea when we posted this that this would become not just you. Apparently, this is registering with everyone out there. That people have a lot to say about advisors and options. Who knew? Who knew that what a seemingly sleepy topic could be so heated, so controversial? I think maybe some of it too also has to do with the fact that people have they're hearing about new DOL rules being rolled back and Dodd-Frank and all that kind of stuff. So financial advisors and the fiduciary rule and everything else kind of top of the news lately as well. So maybe that's contributing to it as well. But either way, a contentious topic. I look forward to seeing how this unfolds. It's only been a few hours. You got another week to go, so make your voices heard here as we keep on rolling. All right, we got time for I think maybe one or two. This comes from Adam Sam. He says, "Hello again." Well, hello again, Adam. I think he must have written in earlier. He says, "I figured out a way to predict the direction of the market for the day with 75% accuracy." Oh, well. Congratulations to you, sir. He goes on to write, "I am wondering what would be the smartest way to trade this info. Should I sell the opposite options out of the money with 45 days and buy them back at the end of the day? Or buy out of the money in the direction it will move?" I'm seeing this live as you're seeing it, listeners, so I'm trying to parse it for you. "I can't predict the after hours, so I want to get out at the end of the day. How would I hedge such a trade?" So there's a lot of moving parts here to parse. He says he wants to sell out of the money options with 45 days to go and then buy them back at the end of the day. So I'm not sure if he's doing this daily or buying out of the money in the direction it will move. 9 times out of 10, if you have an indicator that you have such confidence in, and you think it's going to predict direction, easy for me to say, then selling options against it, you're going to be picking up nickels and dimes. If you have a direction indicator you have such firm belief in, then long premium is probably the way to go. You probably want to mitigate it with spreads. Maybe some more information if you can send us, Adam, Sam, on exactly what the heck you're talking about. You don't have to give us your secret sauce, obviously, but help us help you. You're talking about 45 days versus daily. Let us know kind of what some of the nuances are in there, and then we could, I think, provide you with a little bit more insight. Here's an easy one to wrap up on. This is right up your alley, Mr. Rock Lobster. I think you may have a webinar coming up on this exact topic. It comes from BGT. He or perhaps she asks, what happens to options if the Fed raises rates in December? I think short answer, not a heck of a lot, because it's not going to do a big raise. But longer term, things like Roe start to raise their ugly head. So, Mr. Rock Lobster, like I said, I have a feeling you may be talking about this soon, so I will let you dive into all things Roe with our friend BGT.
Oh, my gosh, you threw me the biggest softball in history right there.
That's why you pay me the big bucks.
Right across the plate. Oh, sorry. That's why they pay you the big bucks. Well, let's put it this way. Make it easy. Call values go up and put values go down. Long-term call values go up a lot. So it actually makes calls more valuable that you own before the rate change. But if you want to try to buy longer-term calls after those rates go up, they get more expensive. There's lots of other stuff, if you have reversal conversions and other, we just talked about a box, locked interest rate trades. The debits you pay for them will go up a little bit because you're going to expect more short interest coming in, stuff like that. So, but you should see calls rise a little bit relative to puts. Long term, you should see that action more. Also, fixed income products tend not to do super good when interest rates are going up. So those are the big ones as we examine that topic this Saturday.
There you go. They have a webinar, optionpit.com, to learn more. Man, we're hitting the sexy topics today, huh? Box spreads, Roe. We're just if this doesn't put you to sleep, we love you. You're great. You're hardcore. You're in our wheelhouse.
The Viceroy would have been great for this show.
That's true. All we missing is some big macro conversation, and Viceroy would have been all over it. All right, let's keep on rolling. Great questions. We love them. Let's keep on rolling to our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we tell you what we're keeping an eye on for the rest of this week just for the rest of this week for now. We'll get to the weekend on our second show later on Thursday. And we can't even look far ahead to the weekend because we got a big event coming up this week called the old Fed, kind of what Mr. Rock Lobster was just alluding to earlier. Now a lot of the potential raise has already been priced in, so we're in kind of one of those weird scenarios where if the Fed doesn't raise or they raise extremely aggressively, we have a bit of a weird kind of scenario where will the market sell off if it's unexpected, that sort of thing. But we're in one of those old school Fed imminent markets, so always fun back on the floor. You see the big hashtag. Well, it wasn't a hashtag back then because there was no Twitter, but just the branding of Fed imminent was everywhere, which is always kind of fun. I think we lost some of that luster, but maybe we're getting a little bit of that back now that the Fed is starting to matter, perhaps, yet again. Uncle Mike, we'll start with you. What are you keeping an eye on in this hashtag Fed imminent world?
Well, number one, I'm keeping an eye on that survey this week. That one really struck a chord with me. So
that one's resonating. You can get all your friends, everybody, to vote for number 3. Vote 3. Vote 3. You're gonna try to
or
game
one. Either I'll do it myself or 3. I mean, folks, if you go in between like that, that's like asking your wife to be a little bit pregnant. You're either in or you're out. Come on. So yeah, with that, I think the Fed is going to be. That's the only thing that that's really going to be moving this market in a greater amount, unless we see some type of surprise or something along those lines. We could see some type of a spike in natural gas to the upside or to the downside, as well as oil. But aside from some type of a surprise, I think the Fed is the big news, along with the option block survey.
There you go. Vote 3, says Uncle Mike, or maybe 1. He'll allow either of those. Other 2, don't talk to him. You're off his Christmas card list. All right, Mr. Rock Lobster. Fed imminent. What are you watching, sir?
Fed imminent. I'm just want to see if they just do anything stupid, right? All they have to do is just rates just go back up. I mean, why do they keep going down?
Isn't that any given Tuesday in the Fed doing something stupid?
Okay. Yes. The money is not just free for the government to keep spending. It's like in everybody else. It's just there's something inherently not right about all of that. But I've already said my piece on that, and even notice now how the market has actually, when the focus is actually not on just monetary shenanigans and more on regulations and trying to make money and stuff like that. We get to all-time highs, but quick. So. We're looking for growth, and a normal monetary policy would be normal. And the market likes normal. The market likes not confusing when it comes to those big ticket items like that. So I would not be surprised to see it higher. I hope nat gas goes higher. I hope it goes to $1 zillion BTU, but that would be talking my position up a little bit too much. Other than that, and just see if we can get these Qs to kind of join the Santa Claus rally here to the end of the year. I'd like to see some nice fat new highs in the Qs getting ready for 2017.
$1 million BTU. That might make it a little costly to heat the palatial estate in Maine, sir. Of course, if you have that much on 60,000 plus contractors, I assume your average position size, then you probably would be able to afford it.
Yeah, exactly. I think I could afford the gas, but I got a tank full of it right now, so I might survive this winter.
All right. One thing that won't survive, unfortunately, is this show. It's done. It's over. Unless, of course, you're listening after the fact. Then it's new to you. Welcome. All right. But before we go, let me check back in with my cohorts, my partners in crime, see what they have cooking up that may interest you. Let's start with you, Mr. Rock Lobster, because I think a little birdie told me you may have something cooking about Roe over there in the land of the pit.
Yeah, a little thing on Roe, interest rate, the kind of positions, how far things can go when interest rate policy goes in one direction. That is our subject. This for our Saturday class. Also look for our volatility class for all of you that want to learn how to trade volatility, actually use all the vol products right. And find ways to make some dollars on them. Understand the difference between real edge probability, and how to set a trade up based on that stuff. Come to our vol class this winter, January and February. I will be running it, and there you go.
And Uncle Mike, if someone does indeed want to vote in our poll, well, they can do that at options, or find themselves a level 3 option specialist. Where should they go? What should they do?
I'll even do this. You got me so wound up today, Mark. I don't get wound up that often, but you got me wound up. If you can attest that you vote, if you tell me that you want to be a new client of mine and you voted level 3, I will give you Q1 fees for free for 2017. Free of charge.
Wow.
For your fees for Q1 if you voted 3 and you want to become a new client of mine. Current clients know, because you already voted 3 by having me, I like to think, but not trying to toot my own horn. But I do like to think that hopefully you view me as a 3, otherwise you wouldn't be with me. But if you want to be a new client and you voted 3, Q1 fees for 2017 are on me. Contact me, 312-212-3531, or send me an email at m2saw@rcmfs.com.
There you go. Free fees. Easy for me to say. For all of Q1. Just got to vote 3. Or at least call up and tell them you did. Also, while you're doing that, make sure you call them up, ask them for that epic sojourn we talked about last week. That'd be pretty funny as well. All right, and with all that, we're going to come to a close, like I said, this epic sojourn of our own through the world of options. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, for those of you who join us live, we love you guys too. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.